The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Welcome, everyone, to another edition of Breakout Investing on TFNN. Ken Shreve with you. Man, we've had a lot of rain here in Southern California, but finally a sunny day out here. Hope you're having a great day wherever you are. 877-927-6648. That's the number to use if you want to give me a call, talk about this market. My show airs daily on TFNN from 3 to 4 Eastern. You can also get the show as a podcast on iTunes if you can't listen live, so head over to iTunes, check out the podcast. Don't forget you can listen to all TFNN programming on your smartphone. Just type in tfnn.mobi. Very simple, very easy. tfnn.mobi in your smartphone browser. Another way, easy way to listen to the show. And I'll be looking at charts on the program as I do each and every day. If you want to look at those charts live right along with me, you can do that with Tiger TV, available on the homepage of TFNN.com. Channel 1, the show is carried live, and it is archived in Channel 13. Tiger TV, also viewable on your handheld device as well. Folks, don't forget about the Tiger Dollar promotion on the homepage of TFNN.com. We do it at random times throughout the year, but particularly during the Christmas season, holiday season, where we like to donate money to the Salvation Army. So here's the deal. You can get all the details right on the homepage of TFNN.com, but in a nutshell, you can use Tiger Dollars to purchase anything at TFNN.com and save a lot of money doing it. So if you purchase Tiger Dollars, we'll donate up to 10% of your purchase price to the Salvation Army. Sign up by December 19th and get a 25% bonus match on any amount of Tiger Dollars you buy over $500. So be sure to check out all the details on the homepage of TFNN.com. All right, checking in on the markets here. It's been a nice move for the markets off the November 16th lows, and the S&P 500, as we've been talking about, still the case here, facing some resistance at its 50-day moving average. Today, S&P 500 has rallied off its lows. It is now just up a fraction to 1410, call it, after hitting an intraday low of 1403. So not a bad performance by the S&P 500. The Nasdaq Composite also up nicely off its lows. It is trading pretty much at its session high after hitting an intraday low of 2981. It is now trading at above that 3,000 level, 3,001, down a fraction. And we'll check in on the Dow. Why not? Although the S&P 500 and the Nasdaq Composite are the two main indices I follow, but the blue chip index is still noteworthy. It is up 18 points today to 12,983. Resistance level for the Dow at this point is going to be in that 50-day moving average, 13,174. All right, so we've got some volume to talk about in the market today. Volume not too heavy today, tracking pretty close to what we saw yesterday. On the Nasdaq, we're tracking about 5% higher than the 1.63 billion shares we saw yesterday. Pretty light volume on the Nasdaq. Monday, we're tracking about 5% higher than that today. Volume on the New York Stock Exchange yesterday was also pretty light at 654 million shares. We're tracking pretty much on pace, pretty close to that level today. So overall, a low volume day in the market, and for now, these 50-day moving averages for the Nasdaq Composite and the S&P 500 look like near-term resistance. Earlier today on Bloomberg, did you catch President Obama? He said there will be no deal to avert the fiscal cliff unless Republicans drop their opposition to raising tax rates on the wealthiest of Americans. Obama wants to pretty much raise the rates on the top 2% of income earners to 39.6%. That's basically where they were under former President Bill Clinton. Of course, Republican opposition to that. All right, so that's what's going on there. Let's take a look at some headline stocks today. Shares of Netflix up nicely today. NFLX. Shares of Netflix. Pull up a chart here. Wild day of trading for Netflix. It hits an intraday low of 74.50. It is now trading at 85.96, up 13.1% on the day. A little, I guess you could call it a technical breakout for Netflix, but the news here is that it's going to be the exclusive U.S. subscription TV service for Disney first-run live-action and animated feature films. Basically, it means that starting in 2016, Netflix subscribers will be able to watch movies from Disney, Walt Disney Animation Studios, Pixar, Marvel, etc., as soon as they are made available for pay TV. So good news for Netflix. It's really interesting watching some of these stocks that were left for dead not that long ago. There are three that I can think of that have all of a sudden come back to life. I'm not sure I trust their price movements, but Netflix would be one. Green Mountain Coffee Roasters. Let's check in on GMCR here, because not that long ago there were a lot of questions about Green Mountain Coffee Roasters fundamentals, just like there were a lot of questions about Netflix's fundamentals. And GMCR has been a monster performer. You can see $24 stock back just in mid-November. It is now trading at $40.18, up another 6.3% today. As far as I'm concerned, I mean, these stocks are not on my radar. I don't have any interest in owning Netflix. I don't have any interest in owning Green Mountain. And I also don't have any interest in owning Deckers, DECK. This is a stock that has made a very nice move. Again, since mid-October, it was a $30 stock. Now it's about $41, down 3.2% today. But all three of these companies still have fundamental questions that are not fully answered. And I'm a fundamental and a technical investor. So just because a stock is going up gangbusters doesn't mean I want to chase it and I want to own it. And as far as I'm concerned, the fundamentals are still very cloudy at all three of these firms, even though definitely they've seen their share of buying demand in over the past 2 or 3 weeks. So good example of how I use fundamental and technical analysis when evaluating a stock. I just don't like to buy momentum just because something is going up. It needs to be in a nice base. It needs to be showing signs of meaningful institutional accumulation, and there has to be a fundamental story that is fueling the price performance. And at least with Green Mountain Coffee Roasters, their patents have expired. They've got just major competition concerns. Netflix has cost issues. Deckers is still trying to sell a very expensive UGG boot in a shaky economy. I just think that the earnings visibility for all three companies is still very cloudy, which is why I'm not really interested in either of these stocks for now. Bond yields today, taking a look at the 10-year note, down to 1.61%, 30-year bond also lower to 2.78%. The U.S. dollar down again, 27 ticks to 79.62. Let's check in on that U.S. dollar index, because yesterday it undercut a fairly significant support level. You can see it had been, over the past 5-6 days or so, had been holding that $80 level pretty easily, but yesterday it broke below support, and it is extending losses today. So U.S. dollar weak, down 27 ticks today after being down actually 27 ticks the day before as well. But U.S. dollar index right now at 79.62, and it has broken through support here. So taking a look at gold, February gold lost $25.30, under a lot of pressure today. 1.5% decline for gold, settles at $1,695.80 an ounce. The Spider Gold Trust, the liquid ETF that is supposed to trade at 1/10 the price of an ounce of gold bullion. You can see it on the day after Thanksgiving on Friday, when the market rallied strongly, it jumped above its 50-day moving average, got a close above the 50-day, and it's been under pressure ever since over the past 7 trading sessions or so. It is getting hit today again, down $1.88, 1.1% to 164.25. Pretty good support for the GLD at its 200-day moving average at 161.50. So you can see it came down to that 200-day line back in late October, early November. Found initial support. It appears intent to want to make another trip down to that 200-day line. So we'll watch the GLD in coming days. Crude oil today ends a modest winning streak, down 59 cents to 88.50. No economic data today to speak of, but tomorrow we have the ADP employment report. That's a look at private payroll growth. Expectations are for private payrolls to be up 125,000. We'll also have factory orders tomorrow for October, and the ISM Services Index also due Wednesday. On Thursday, challenger job cuts and weekly jobless claims, and on Friday, non-farm payrolls are expected to rise 90,000. We'll also get the first look at consumer confidence for the University of Michigan for December. Financials looking very iffy here, aren't they? Let's take a look at the XLF, the Spider, the Financial Select Sector Spider Fund. This resistance at the 50-day moving average, I talk about it a lot, but it's really a good way to tell when a stock or ETF or even a major index is starting to get a little tired, buying demand drying up. That appears to be happening with the XLF, the Financial Select Sector Spider Fund. Tells me that wouldn't be surprised to see this to see lower prices in the near term. And you've got a lot of financials that look very similar to the XLF, not surprisingly. Look at a chart of JP Morgan Chase, and very similar action here. You can see a break below the 50-day moving average for JPM back in November. It has been trying to rally back above that line for a couple of weeks now and not having any luck at all. So just like the major indices, what we're going to need here is some heavy volume buying. Possible we could see it in the financials, possible we could see it in the major averages as well, because for the S&P 500 and the NASDAQ composite, in order for them to crack through or break above their 50-day moving average, they're going to need some pretty meaningful accumulation, heavy volume buying for that to happen. I think the same is going to be said for the financials as well. Restaurant stocks under a lot of pressure today. Let's check in on Darden Restaurants. Anytime a company tries to reinvent itself, it's usually problematic. We're seeing that with Hewlett-Packard. We're seeing it with Dell. It's just very difficult for a company. You do what you do, but then when you try to venture outside of what you're good at, it can present problems. And Darden Restaurants has been trying to reinvent itself. At their Olive Garden chain, they've been putting a greater emphasis on value and lighter fare. At Red Lobster, they're actually kind of branching beyond seafood to try to bring customers in there that don't like seafood. Anyway, their earnings report was dreadful today. We'll talk about that when we come back, but shares down 9.5% today to 47.42. Darden taking a big hit, and it is dragging a lot of other restaurants down with it. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Yeah, talking about Darden Restaurant. Stock is under a lot of pressure today, down $5, 9.5% to $47.42. And basically, the company, they came out with an earnings warning. They guided their current quarter lower. They guided fiscal 2013 earnings lower as well. They've been trying a lot of promotions, things to drive traffic to their Red Lobster, Olive Garden chains. And basically, it is not working because it was pretty poor guidance, and the stock is trading lower as a result. And this is something that a lot of companies go through. There's no question about it. You're kind of humming along, you're doing good business, and then things change, and then you try to to fix things, and sometimes you try to go do things and try to reinvent yourself, and it becomes very, very challenging. So Darden is looks like it's in a little bit of trouble here. Challenging times, certainly a very competitive landscape, all sorts of restaurants out there, very difficult business to operate in. Certainly Chipotle Mexican Grill has taken a big hit in recent weeks, and I've talked to some people that say that this still could be a good short out there. Here's a look at Chipotle today, actually up $5.36, a 2% gain for Chipotle to $269.11, but when you look at its weekly chart, I can understand the short argument, because look at this 10-week moving average here. See a big move down for the stock this summer on disappointing second quarter earnings. Tries to rally back above its 10-week moving average in August, September, fails. Is trying to regain the 10-week line again and not having much luck. So if it fails again, wouldn't be surprised to see this one start to head lower again. So Chipotle still looking vulnerable here, at least in terms of as far as its technical picture is concerned. And then some other former high-flying restaurant stocks looking very weak here. Shares of Panera Bread fell below its 200-day moving average earlier today. It is trading back above the 200-day line, near its high for the day, but still down $1.38, about 0.9% to 157.85. So this is a stock clearly making a series of lower highs here and lower lows. So it's sellers are in control for now, and I typically don't like to buy stocks when sellers are in control. That's the case with Panera, and I think the same can be said for Buffalo Wild Wings too. BWLD, another stock that just can't get out of its own way, down 54 cents today, 0.7% to 72.72. So the restaurants, I don't have any restaurants in the Ultimate Growth Stocks model portfolio. I'm happy that that is the case, because the industry group is looking pretty weak right now. I have been doing some sporadic buying for my Ultimate Growth Stocks model portfolio. I actually went short a growth stock yesterday that is immediately paying nice dividends. So if you want to see what the model portfolio looks like, you can do that right on the homepage of TFNN.com. Just click on the newsletters tab and then investment newsletters. You'll see Ultimate Growth Stocks right in there. I published my weekly update earlier today, and I publish every Tuesday, and then in between I send out buy alerts, sell alerts, market updates, and stay in communication with subscribers. So I think I've got 6 long positions on right now and 1 short position. And frankly, when I look through my growth screens, I'm seeing very, very isolated buying opportunities, and it does make me a little concerned about this market, because when you're in an uptrend, you really want new leadership to be sprouting up all over the place, and it's not really happening, at least not yet. The names that I currently am long, I like them all. I think they've got great potential. And most are trading above where I initiated a position, but then again, it's not like they've gone gangbusters since I've owned them. So I'm just kind of watching them closely, willing to give them a little bit of room here. But they're the number of weak stock charts out there are. They're out there, and that is worth paying attention to as well. So seeing some compelling long setups, but seeing an equal number of short setups as well. So that's my quick take on things there. Another headline stock today, Baxter International, ticker BAX. Earlier today it said it's buying a Swedish dialysis firm Gambro, and they're a competitor of Baxter. The deal is worth about $4 billion. Baxter's been a pretty strong performer in the market, still holding above its 50-day moving average, but the stock is under just a little bit of pressure today, down 46 cents to 65.34. And all right, we still got a lot to get to. Earnings from AutoZone, not very good. We got Toll Brothers, big growth from Toll Brothers. Was it enough to help the stock? Is it too late to buy the home builders? I've seen a lot of people on TV saying buy, buy, buy. It's still not too late. I'm not sure I agree with that. I'll tell you why when we come back. You're listening to Breakout Investing on TFNN. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Let's check in on the markets here. Again, another resilient performance here. We were down, but well off the lows. The Dow right now holding on to a small gain, up 9 points to 12,974. NASDAQ just down a little bit, 4.5 points to 2997. And the S&P 500 down almost 1 point to 1408. So this is, it's a deviant market. It's been a deviant market for a while. The jostling is, goes back and forth between Republicans and Democrats in this fiscal cliff shenanigans. They do seem like they're not close at all, but as we'd expect that we're still early in the month of December, so hopefully Republicans and Democrats will get their act together, because at least the stock market is not going to like it if the perception is that zero progress is being made. And while it may seem like no progress is being made, I think it's taking baby steps right now. Obviously they're far apart, but I think that I think progress will be made between now and the end of the year. So let's hope for that. Anyway, let's check in on shares of AutoZone today, because that was a pretty big downward move for the stock today. Auto parts retailer down 3%, $11.34 decline, but this is a high-priced stock. It's last trading around $366.67. Earnings were up 16% from a year ago to $5.41 a share. And what else do we have here? Sales up nearly 3% to nearly $2 billion. But this is a stock that is facing a lot of selling pressure today. Investors not overly happy with the earnings report. Now, mentioned Toll Brothers, TOL. Toll Brothers had pretty decent earnings. They made 35 cents a share excluding items. That was about 11 cents better than the consensus estimate. Sales were up 48% to $632.8 million. The estimate was for sales of $567 million. So that was well above the consensus estimate. Backlog, which basically measures potential future revenue, rose 54% to 2,569 units. Cancellation rate declined to 4.6% from 7.9%. So the metrics were pretty good. The stock can't get out of its own way. It's been basing consolidating gains since September. It hit an intraday high today of 34, but there are sellers in this stock. There's absolutely no question about it. Volume very, very heavy today, 10.5 million shares. The stock is up 15 cents to 32.58, but trading near its session low. So I got to tell you, I'm just not keen on the home builders here. I owned the ITB for a little while, sold it a little bit too early. You can see it's still holding above its 50-day moving average here, but after the tremendous run that the home builders have made basically since July, seems to me that they're probably just going to base consolidate gains for a while, and perhaps this could it could set the stage for more strength in 2013, but I'd rather wait and see that kind of play out before making a prediction that they're going to be able to continue to lead the market in 2013. And again, I say that just because of the incredible price move. Basically, a lot of good news may be already priced into the home builders. I do believe that the housing market has probably made it through the worst of it, and slowly but surely we'll see home prices continue to improve, and new home sales data, existing home sales, housing starts, all these pieces of economic data that investors like to look at, we should see continued improvement in 2013. But when you're looking at the individual home builders or an ETF like the ITB or the XHB, you really look. You got to look at you got to look at where they've come from, because after huge gains, stocks always pause and rest and consolidate. And sometimes that sets the stage for continued strength, but continued strength is only going to be fueled by renewed signs of institutional buying. And what I'm seeing in the home building space in general, especially in the ITB, is a lot of distribution and not much in the way of institutional buying yet. So I don't own any home builders right now, and I'm fine with that. I'll consider it in the future if the market tells me to consider it. But overall, just not seeing that many charts that look all that appealing right now. Big Lots was another company that came out with earnings earlier today. BIG, that's an easy ticker to remember. This is a discount retailer. The stock has been beaten down. It's a technical mess, but making a nice move today, up 11.1% to $31.16. They lost 10 cents a share. That was much better than the consensus estimate for a loss of 24 cents. Sales were flat at $1.13 billion, mostly in line. But stock gapped up today and is having a pretty good day. Shares of IACI, Interactive Corporation. Goldman Sachs downgrades the internet holding company to sell today from neutral. Goldman cited increasing competition in the search business. And boy, Interactive Corporation has really taken a hit since October. It was a $55 stock, went all the way down to $42. It has been in rally mode. In fact, today it was working on a 9-10 session winning streak, but it is down 7.3% today on the sell recommendation by Goldman Sachs. Last trading at 43.73. 3D printing companies, got to check in on them. Stratasys, remember Stratasys? It broke out in light volume. I guess it's a good lesson not to pay so much attention to low volume breakouts. It cleared a swing point of 69.08. That was the swing point set. If you're watching in Tiger TV, broke out over the swing point right here, and then the actual breakout day was on November 21st. But no volume ever came into the stock. Volume came in 2 days later on, when was that? That was on November 26th. But now the stock has been under selling pressure for 4 straight sessions. One thing you don't want to see in the early stages of a new uptrend is a multitude of failed breakouts. And at this point, I think you could say, even though Stratasys is trading just underneath its last entry point around 69.08, it is trading near its session high today after early weakness. There have been some very big sellers in the stock yesterday and today. It is still holding above its 50-day moving average, but this looks like a failed breakout to me. The good news is that we really haven't seen, failed breakouts have really been the exception, not the rule, since we got the follow-through day on Friday, the day after Thanksgiving. So overall, growth stocks look pretty good. Stratasys under a lot of pressure over the past 4 trading sessions, and also 3D Systems. These trades did get crowded very, very quickly. I'm glad I avoided it. I didn't want to. In fact, I think it was last week, I outlined my reasons why I didn't buy either of them, and it was a little frustrating to see them going up when I was explaining, why I wasn't in them. But in the end, it turned out to be the right decision. After 3 straight days of declines for 3D Systems, it is catching a bid a little bit today. It's up 3% to 43.88, but 3D Systems has been under selling pressure as well in recent days, rebounding a little bit today, but not by much. Mentioned Rackspace Hosting, RAX. Rackspace holding above its 50-day moving average here at 65.63. This was another little breakout here. Rackspace tried to break out over, I think 67 was the swing point recently that it broke out over, but this was another case where there just wasn't any volume behind the breakout. So I think there's a chance that institutions are eventually going to come back into Rackspace Hosting. This one definitely has the potential to be a market leader, especially when you look at annual earnings growth. This year they're expected to earn 75 cents a share. They earned 55 cents a share in 2011, so you're looking at 36% growth there. And then out in 2013, they're expected to make $1.08. And, if that 75 cents a share holds this year, you're talking about 44% growth, accelerating growth in 2013. So Rackspace is, they provide web hosting services, and they're also getting about 25% of their revenue from cloud, in the cloud computing area. So this is another stock with great potential. Now, I mentioned that even though you look at our racks, you still see a decent technical setup here. Even URI, let's check in on United Rentals. This is a stock that looks like it could be a leader. It is kind of flirting with a breakout here over $43.13. It hit an intraday low today of $40.26. It is now up 1.4% to $42.24. They had an investor day. They talked to analysts in New York today. I didn't hear any details about what was said, but the volume really started to pick up in this thing. Right around 1 o'clock Eastern, it rallied sharply off its lows. So this is another name I think that has potential here. So while you've got some decent charts out there from the likes of United Rentals and from the Rackspace that we just went over, you've got a lot of stocks that really are looking a little worse for the wear here. And one name would be Equinix, EQIX. And I say that just because of what looks to be so far consistent resistance at the 50-day moving average. You can see Equinix, when was this? It was in early November 2nd, where it went over 195 and then it closed all the way at 190, tried to reclaim its 50-day moving average here, corrects all the way down to around 170, trying to rally back here, but facing with resistance at the 50-day moving average here. This one, at the very least, it's just building a base here. It's way too early to buy. If this thing keeps bumping up against its 50-day moving average and keeps getting turned away, that is really a sign that buying demand is drying up. And when you're looking to short stocks, you want to short stocks where buying demand is drying up. I mentioned yesterday a common pitfall. People short stocks with all the wrong reasons. Sometimes they don't short stocks that are breaking down. They short stocks that are healthy technically. I think Equinix is a stock that, to me, is in the early stages of breaking down here. Hasn't completely broken down yet. It even if it does come down to its 200-day moving average, it still could find support at that 170, 171 level. But you want to short stocks where buying demand is drying up. You don't want to short strong performers just because you think they can't go any higher. So short stocks that have weak technicals, don't short stocks with strong technicals. Let's take a look at some other names here that are looking vulnerable. Michael Kors, this was a former holding in the Ultimate Growth Stocks model portfolio. It's a stock that we did well with, but it's kind of basing right now, and I really can't say with conviction that this is going to try to break out in the near term. In fact, when I look at its trading over the past 5 days or so, normally a strong stock like this that is intent on building the right side of its base, it's going to build the right side of its base, and it's just going to move back above its 50-day moving average. Look at what Kors has done over the past 5 trading sessions, basically trading right at that 50-day line around 53 and a quarter. Stock right now is at 52.42, so it's back underneath its 50-day moving average. Not going to give up on this one yet. I do believe in the company's growth story. It's a popular luxury brand, and but it's building a base, and to me looks like buying demand is drying up, at least for now. Now, if you see new signs of institutional buying, we'll change our tune. But Kors struggling to attract buyers at this point. Here's another kind of not really a growth name, but B&G Foods, another stock that is looking very tired here. Here's a daily chart. You can see the stock is up 2 cents today to $28.93. But let's take a look at its weekly chart here, and this to me is looking like another possible short setup here. And again, the ticker symbol is BGS. And you've got a company with decent fundamentals, but you do have a company that has been under some distribution. See this big red weekly volume bar here. You see some higher volume declines back here in November. But this is another example on the weekly chart. The 50-day moving average is basically the 10-week moving average, and for a little more than 4 weeks, you can see pretty persistent, consistent resistance at the 10-week moving average. So another case where buying demand seems to be drying up. And how about ELLI? Ellie Mae, they provide business automation software for the mortgage industry in the U.S. This is another stock that is went below its 50-day moving average back in October. A lot of distribution in the stock. You can see right in this area here, and trying to rally back, hits a low of around $21-22 a share, starts to get up to that 24-25 level, but meeting with resistance at the 50-day moving average. You can see how I use moving averages to help me get into short positions. When I went short yesterday, a former big bull market leader, it was just showing persistent resistance at some key moving averages for an extended period of time, and the bottom completely fell out of it today. So it's nice to be proven right within a day when you either go short or long, but that short position from yesterday is working out nicely today. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m., and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. Let's check in on the markets here one last time before we head into the close here. 5 minutes left to go in Tuesday's session. NASDAQ Composite trading in the top half of its trading range today. It is down almost 7 points to 29.95, going back and forth, up and down, trying to hang on to that 3,000 level, but about 5 points underneath the 3,000 level right now. Haven't checked on volume in a little while, but again, yesterday on the NASDAQ, volume was pretty light at 1.63 billion shares. I know at one point today we were tracking about 5% higher than that today, and still right about where we're at. So we could come in a little bit higher than the 1.63 billion we saw on Monday. And the S&P 500, see what that index is doing. It is down 2 points now, trading pretty much in the middle half of its trading range today, maybe slightly below, down 2 points to 1407. NASDAQ volume tracking very close to what we saw yesterday on the NYSE. Or I should say volume on the New York Stock Exchange tracking very close to what we saw yesterday, which was 654 million shares. Don't forget about the Tiger Dollar promotion on the homepage of TFNN.com. Purchase Tiger Dollars will donate up to 10% of your purchase price to the Salvation Army. You can use Tiger Dollars to get more bang for your buck recently. You can buy newsletter subscriptions, save a lot of money doing it. You sign up by December 19th, and you get a 25% bonus match on any amount over $500. So be sure to check out the details on the homepage of TFNN.com. I mentioned a fairly quiet week of economic data, but later this week, we do have the jobs report coming out, non-farm payrolls. I think in October, we had 171,000 new jobs created, which was much better than expectations. This time around for November, job growth is only expected to be around 90,000. Unemployment rate expected to be, 7.9? I think it's supposed to tick higher a little bit, maybe to 8%. So hopefully there will be good news, or at least the stock market bulls hope there is good news Friday when it comes to the jobs report. After the close today, let's hear what Pandora Media has to say. This is interesting stock, internet radio. It has been in rally mode for the past couple of weeks. In mid to late November, it was a $7.50 stock. It is now $9.47. That's a pretty big percentage gain. Another big gain for the stock today, up 5.7% ahead of the results to $9.47. Pandora Media. I love it. I have it on my iPhone and just internet radio. Great way to listen to the radio these days. Plug those earbuds in. And also after the close today, OXM, Oxford Industries. Stock not looking that great here, down 5.3% ahead of the results to 52.47. So Pandora, Oxford Industries after the close today. And then let's see, tomorrow on Wednesday we have TTC, Toro Company. See what Toro is doing ahead of its earnings report tomorrow. Look at its price performance. Has been quite good. Toro right now up 1.2% today to 45.10. Looking actually very extended here. Recently broke out over a swing point of 43. Now trading around 45, but tremendous relative price strength from Toro ahead of the results. Also Wednesday, G3 Apparel, that's ticker GIII, and Francesca's as well, I believe, is scheduled to come out with earnings tomorrow as well. Don't forget Lululemon on Thursday. That'll do it for Breakout Investing today. Thanks very much, as always, for tuning in. Tom O'Brien Show coming up next. I'll see you back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing. Take care, everyone.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.